about gross profit. Okay, what is gross profit actually mean, and what are the types of interview questions that you can be asked, right? So first of all is that gross profit is basically sales minus your direct costs. It's simple. Within the direct costs, you basically have what we call the cost of goods sold, right? अब सर जो cost of goods sold जो होती है, cost of goods sold can be calculated in two ways. One is a perpetual, and the second one is periodic. So periodic is what we basically see in Tally. So for example, if I go down into Tally here and I go into the stock summary and I go down here with any of the items here, this is my periodic. Is particular for this particular period, what is my opening balance, closing balance, and then I will get my closing stock value, right? Perpetual is when I calculate the gross profit on a line by line basis. Line by line basis means that for every sales entry you calculate what is sales minus cost of goods sold. So this is what we have actually done here, that in this particular module. So what our accounting friends to do is to understand how the how this is calculated. Now your gross profit can be calculated at the voucher inventory level or at the batch level. So when you have multiple go downs, then one can calculate the gross profit by each location. Now methods of gross profit calculation. So one is going to be the weighted average. In weighted average basically means that you do a running sum of all your values associated with purchase accounts, right? Excluding the following movement types. So because they will ask you how is gross profit calculated. First is anything to do with orders. Second is that for some companies they do not like to include the delivery notes and receipt notes, but Tally gives you the option of including both delivery notes and receipt notes, but you can actually exclude them also. Now there is a one quick note about the same. The same is that stock journal entries tend to lower once closing stock value. But in general, just stock journal entries, because its valuation is 0. So in the interview, the client could ask how to get a better inventory valuation. So you can say that one could consider removing stock journal entries from the valuation. So this is how I'll tell the accountants how to do it. So now if you look at the method of gross profit calculation, the weighted average, that means the running sum of all your values associated with purchase accounts excluding the following movement types. And this, so this is, say suppose A, and then this is actually divided by the running sum of all the purchase quantities, right, divided it. मतलब मैं क्या करूँगा, ये होगा दिस थिंग परचेज अकाउंट्स और परचेज क्वांटिटीज, ठीक है ना, और द फॉलोइंग मूवमेंट टाइप्स। तो इसमें क्या होता है कि एंड दिस वेटेड एवरेज कैन बी कैलकुलेटेड based on a certain time period. Now, so this A divided by B. So A divided by B shall give the weighted average rate. Right. So that is my weighted average rate. Now this weighted average rate multiplied by the closing stock number will give the closing stock value, right? Weighted average rate calculated on a perpetual basis multiplied with the sales quantity shall give the cost of goods sold. Now formulas है बहुत सिंपल है, आई थिंक मोस्ट ऑफ द पीपल नो इट कि ये कैसे होता है। तो बेसिकली ओपनिंग स्टॉक प्लस परचेज वैल्यू माइनस कॉस्ट ऑफ गुड्स सोल्ड इज इक्वल टू क्लोजिंग स्टॉक वैल्यू। तो ये फॉर्मूला जो है कि कई बार ये जो है बेसिक अकाउंटेंसी उसमें पूछते हैं, तो ये फॉर्मूला बेसिकली यू शुड हैव इट बाय द रोड। नाउ द सेकेंड वे ऑफ कैलकुलेटिंग इन्वेंट्री इज by FIFO, first in first out. So first in first out I do not have, and first out we have, but it's a very complex basis, right? So first in first out is whichever one goes first, that is actually excluded from the inventory beforehand. So there are going to be 2-3 questions which you will be asking. What is cost of goods sold? What is the direct cost? Perpetual and periodic. Perpetual is line by line, periodic is what tally gives, and and this is the gross profit. And then gross profit you can do it by weighted average and FIFO, and then this is it. Now your interview question can also be how is gross profit considered? So basically we have already answered these questions that you can exclude orders and delivery notes and receipt notes. In case you want to include delivery notes and receipt notes and stock journal, then that is also possible. So you can get that and then you can take it out. Now gross profit ratio is gross profit value divided by sales. So now enough of this thing, So we now go down to the tool and how exactly to calculate the gross profit. So for the gross profit, see, you go down to the stock item view, and within the stock item view you go here. You can also set up a slicer. Now this is all going to calculate on a perpetual basis. So this is going to be calculating on a perpetual basis, right? So I can also put in a slicer here, time slicer in the date dimension, and here you go to the slicer, and this slicer will say, suppose you can put it up as date or any of the date entities which you have. So I put up as year and month, and then I start picking up whatever attributes I need the gross profit by, right? So I go here and I pick up company name, I can pick up cost center category, cost center name, and so forth. And then I go down here and then I pick up so this is the stock item view, right? So then I pick up my party ledger name and my item name. So I'm keeping it very, very simple so that you can keep it. Then so that you don't have that problem. So name will not do, item name, sorry. So this is your item name. So this is what you need to practice. And then your sales quantity is going to be here. So your sales inventory value, you will pick it up from here. Your cost of goods sold by weighted average is going to be here. So cost of goods sold by weighted average will be here. And your gross profit would be here. So you go down here and your gross profit by item will go here. Right. So this is as simple as getting it from, this is how you calculate it at this. Now to understand how this weighted average rate has been calculated, so you can go down here and you will have to go down to the inward quantities, because I have told you, look, how this is inward versus outward, that has to be calculated, right? So this is a running sum of all the variable purchase accounts and this. So for calculating your inward and the outward, how the rate has been calculated, so you simply go here, inward balance quantity and inward value. So here you can see the logic for the same, this is by each company we have calculated. Now here, if your client asks you in the interview, can I remove certain type of voucher types, you can exclude or include whichever ones you desire to open it up. So you change it up here, and as an accountant you will be able to get your dynamic cost of goods sold. So this is it. In case your interviewer asks you that, look, can I calculate the gross profit at the batch level? So you say yes, and it's very, very simple. You just go here, back to the report, and you go here, and this is my stock item at the gross profit, right? And this will be stock item, and then I go here, and this is going to be gross profit at the batch level. Simple. I have to go down here, batch value analysis, straight away make this report here at the batch level, and the batch rate is again come down to this here. Now here at the batch level you'll have a company name, but you'll also have the godown name, so because I'll have multiple godowns, right? So you can group it by anything you want. You'll have the party name, right? And then you will have the sales value, so you can have the sales amount 2 here, and after that the cost of goods sold, and then you can have the gross profit. So you have the closing stock, you have the this thing, and similarly after this you can calculate the gross profit. Now one thing would be that what types of analysis have you done with gross profit? So this is going to be an interview question which could be asked. This is an interview question which could be asked, that what kind of analysis have you done with gross profit? So first of all, you need to answer that we weed out the items with negative or below average gross profit, क्योंकि उनको बेचने का कोई मतलब नहीं है, right? The second is, which the interviewer can ask is that if I want to understand the channel profitability, क्योंकि चैनल प्रॉफिटेबिलिटी जो होती है वो एक बहुत ज़्यादा इम्पॉर्टेंट क्राइटेरिया होता है. माई विच ऑफ माई डिस्ट्रीब्यूटर्स आर टेकिंग मोर डिस्काउंट एंड आई हैव अ ग्रॉस लॉस ऑन इट. तो चैनल प्रॉफिटेबिलिटी दिखाने के लिए आप ऐसे कर सकते हो, ये ऊपर गए आप तो ये आपका आ गया स्टॉक आइटम व्यू पे आ गए, एंड स्टॉक आइटम व्यू पे आने के बाद आपको इधर आ जाएगा. इधर आप, there are a lot of ledger master details which could be this thing. So ledger parent, ledger group. If the ledger master has all those details, which are there, which group it is there, then you can bring in all those ledger details here. यहाँ पे आकर के ledger का parent मिल जाएगा, ledger का master. So then you can actually calculate, okay fine, what is going to be my channel profitability, because normally a party ledger name will have that parent would be the ledger, so that can be configured. So in order to find out which channels are not profitable, so you basically take a party ledger name which is associated with sundry debtors, and its parent could be a distributor or the channel name, and then based on that one can calculate the channel profitability. Now gross profit ratio is what they can ask you in the interview. So say that gross profit ratio is gross profit divided by sales. Right. Now the next question that comes is how to include the freight costs. Now this is something which is a very tricky question. इसमें से what happens here is that in your group, if you go here, if you go into the group master, and in your group you have got a master called FX gross profit. So what you need to do is you need to say that ledgers associated with freight should have the gross profit, FX gross profit marked as yes. Right. And from there on, then you should be able to calculate that. So then if those FX gross profit is marked as yes, then we can make a report where freight costs are included in the gross profit calculation. With this, I come down to the end of my demo. Thank you very much for your time, and I'm closing this session.